So also welcome on board Neeraj Dewan, who is joining us on the show right now. Hi, good morning, Neeraj. Firstly, what do you make of the markets? Give us some sense there, Neeraj, because a lot of these laggards are now seen to be making a comeback. Case in point being autos, the defense, the railway counters are seeing strong moves. Which sector are you bullish on, and how do you see the construct of the market right now?
Yeah, good morning. Yeah, market has definitely given a very strong up move. It touched 22,000 around twice, and that was a very strong support from which it bounced. And I think a lot of people were taken by surprise with the kind of ferocity with which we, came back to 25,000. So a lot of people were not expecting that to happen. So I think because of that, you saw a good, move happening. A lot of the sectors, defense, though earlier defense had corrected when the last move happened because of overvaluation. But this time there was this, because of the what happened in geopolitical scenario. So I think that also gave a good momentum to the defense stock. The defense was one sector which we were strong, we were quite bullish earlier also because of very strong order books. I think that is what is played. EL came out with a very strong set of results yesterday. So defense is one sector which has been very strong. And besides that, I think that now after the up move, earlier when the market was between 22,000, 23,000, 23,500 kind of levels, it was very easy to pick up stocks because a lot of stocks available. Even the large cap space had very good valuation. Now you've seen a good up move. So from these levels, it won't be that easy to pick up stock. But I think the bull market is still intact, as per my understanding. And one should use opportunities whenever there are dips in the market, some small corrective moves in the market to accumulate stocks. So railway, like you mentioned, has also started participating. There were some decent numbers from railway companies also, and you saw a very good up move from stocks like Titagarh Wagons and IRFC. So I think these kind of moves may sustain in some of the stocks. So one needs to be very careful as far as what they're buying at what valuation. And besides that, I think domestic focused companies is one where also you saw a strong pullback. So now, all in all, I think the market looks okay for the rest of the year, barring you get some accident or some news flow which we're not aware of right now. But one needs to be very stock specific after the up move that we've seen from 22,000 to 25,000.
The outlook coming in on the market seems to be all good, and bullish outlook coming in and buy on dips is a strategy that you should be adopting right now. The bull run is here to stay, according to Neeraj Dewan. But Neeraj, hi morning. Also want to get your view on the entire metal counter. We've heard that China has slashed its loan prime lending rate for the first time in 7 months. Give us a sense of how this could be sentimentally impacting the entire metal space back home, and how do you expect the likes of Tata Steel, JSW Steel, Jindal Steel, or more from the metals pack to react on the back of this news flow?
I think, according to my understanding, the metal space should stay positive. So, because this move also, there can be some momentum which may build up on the metal space. I'm particularly more positive on the non-ferrous space. So even the ferrous space, like you mentioned, JSW Steel, Tata Steel, and the likes can also get some positive momentum. But I think a sustained move in metal space right now is not so. I'm not so sure about that. So the stocks have rebounded from the low they saw, in a couple of months back. So a strong up move may not be there, but some momentum upside should be there because of this move. Because I think as far as barring China, as far as US is concerned, there is no immediate possibility visible of any interest rate cut there. So that is something which, once that happens, once you get some visibility on that front, I think you may get some better moves, which sustain in the metal space. But definitely because of this news flow, some positive momentum will be there, and I will be focusing more on the non-ferrous space.
Right, so that's the take coming in on metals. In fact, talking about metals, how can you not talk about China? There's a very interesting commentary coming in from Rajiv Jain of GQG, where he's saying that they are very, very underweight on China. They have gone ahead and actually bought some of India as well. What they're saying that ongoing risks from tariffs in China's export-oriented industry, as well as the risk of secondary tariffs from the United States and its trading partners. Based on that, they're saying all of this is making them very nervous about their exposure in China. They are very, very underweight China. They have been, in fact, net sellers, while on the other hand, they're saying that they've been net buyers of Indian stocks as the market witnessed a month-long sell-off. This citing a huge gap in earnings growth between India and China. He's also noted the fact that earnings growth in India has been double digits, while for China it has been low single digits for the last 5, 10 and 15 years. And therefore, he's seeing tremendous upside when you talk about infra investment in India. Neeraj, do you think that would also be one sort of a key go-to point when you talk about investing in India, given the fact that earnings growth continues to be intact despite us going ahead and downgrading the estimates for earnings quarter after quarter? What Rajiv Jain is pointing out the fact that the earnings growth for India when you compare to China has always been superior, and infra is the space or go-to space for India right now. Do you think that's a space that you will also invest in?
Yeah, absolutely. Barring the last couple of quarters, September and December, when there was tepid growth in our numbers. But March quarter, you've seen some decent numbers coming from even the large cap stocks like LNG. Infrastructure, I think is a space where there is definitely good order built up. When interest rate cuts have started here, so that will also get an liquidity infusion by RBI. So there'll be liquidity, there's interest rate coming down scenario going ahead also. So that will really be that will have a major impact on our infrastructure space. So the execution will pick up. So that was visible in the March quarter also. So I'm very bullish on the domestic infrastructure and the domestic focus space, whether it's our infrastructure related, space like water, telecom, where there is a lot of capex which is going to happen and which is an ongoing process as far as these companies are concerned.
All right, but other than that, let's also get stocks of some of the newsmakers as well. And Soumya, just wanted to have your take on PI Industries, because this was one of the earnings candidate. The profits are actually down almost 11% on a sequential basis. And when I look at the management commentary, they're actually guiding for a single-digit revenue growth overall in FY26, while a strong pickup expected in the pharma segment. Give us your sense on the technical front, because just yesterday it was a bit of a flattish sort of a trade coming in for this counter, but where do you see the stock headed? The numbers don't look that exciting indeed.
PI Industries overall looks like it is consolidating in a very small range. However, overall it is looking bullish. High tops, high bottom already trading about 20 and 40 daily moving average, closing about 200 daily exponential moving average. Momentum indicators on the buy side. The best thing is that the consolidation is the right shoulder of a huge head and shoulder pattern. So I think it will be a breakout on the upside. You can keep a stop loss around 3600, and the target should be around 4030. So these are some short-term targets, but I think it should go above 4300 levels in the medium-term outlook.
So that's the day coming in on PI Industries. Let's watch out for this result candidate. But Soumya, also just wanted to have your take on the power sector, because a lot of these stocks are buzzing away in trade. Well, of course, just last week, our reporter also got us a news flow highlighting that there has been a sudden surge in the power demand, and it was almost a 12% jump. But well, of course, this number gets adjusted on a daily basis. But the stocks are showing momentum, Soumya. What we are seeing is stocks like even CESC, that was up around 7%, Tata Power, Adani Power, they are holding up well. Any stock that stands out for you within this basket?
I think my top pick was NTPC and CESC. So these are two stocks I'm looking out for. However, NTPC has been sliding down, consolidating in a small range, but I'm expecting a good bounce from here, a good rally on the upside for the medium-term outlook. A large cap momentum indicators on the buy side. The breakout level should be around 351. Once we close above 351, I think the next target for NTPC would be 370. That would be my target. CESC definitely in a very good run on the upside. Medium-term outlook, short-term outlook looks great. The first target would be around 182 and the next target would be around 190 levels. The stop loss should be very strict around 161. That would be my stop loss, and CESC and NTPC would be my top picks.
Okay, and Samad, on similar lines, also tell us your outlook on Petronet LNG from the charts. It's an earnings candidate. We also have news flow here, and it's been a good set of numbers coming in from Petronet LNG as well. And well, yes, on a consolidated basis, their PAT is up almost 23.5% sequentially. Margins also looking very good. And what we understand from agencies that India's LNG demand is going to be moving up as power sector demand is going to be rising on the back of hot weather. Samad, help us understand what you're spotting for Petronet LNG as of now, because YTD or last 1 year as well, the stock has done absolutely nothing. Time for some re-rating, time for some up move on the charts.
Definitely, I've been waiting for the stock to break out on the upside. It has definitely broken out from a downward sloping trend line, but it has been consolidating in a very small range. I'll be expecting a good rally on the upside in the medium term outlook. In the very short term, it's been consolidating for a little while, and probably if somebody has the appetite to hold and stay, then keep a stop loss around 309, and the targets for the stock in the medium term outlook would be around 350, which is the previous swing high. The momentum indicators on the buy side in the higher time frame. So have a positional trade on this, not a very short term trade.
So that's the take on Petronet LNG. Neeraj, want to come to you and get your sense on the QSR space that we've seen. It's been an unexpectedly good quarter coming in for QSR. If you talk about select companies like Jubilant has done well, Westlife has done pretty decently. Yesterday we had numbers for restaurant brand Asia also. They've also done very well. So it seems like there's been a recovery both in the delivery and dine-in segment. What are you making of this sector, and do you believe that now this is time for a turnaround for QSR, because it's been absolutely lackluster for the past couple of quarters?
Yeah, actually, there has been disappointment earlier from the QSR segment. Now these companies had corrected, and they had not done well. But I think because of the inflation scenario, the inflation is also coming down and it's staying low. So I think that scenario should continue for some more time. And we've seen some demand pickup happening for these companies. So I think that should continue for some time, more because of the raw material cost pressure, inflation coming in control. But I don't have any specific buy or exposure in the sector. But according to my understanding, after seeing the Jubilant food result, I am positive that this trend should continue for the next couple of quarters at least.
All right, so that's the take on some of the QSR space. Let's talk about fertilizer stocks, and I'll come back to you, Neeraj, to get your views on that. But the sources have told ET now that the government is reviewing fertilizer supply demand scenario in the country. The centre is also likely to provide additional subsidy if prices continue to rise in the international market. Prakash is here for more on that. Prakash?
The sources are suggesting that the government has reviewed fertilizer demand supply scenario in the country. We're given to understand that the fertilizer ministry has taken stock of the availability of NPK category fertilizer amid rising prices in the international market. DAP prices have increased by more than $100 per ton in the last 2 months, crossing $650 per ton, and that's a matter of concern for the government at this point of time. Discussions are underway, and sources are indicating that the government is likely to provide additional fertilizer subsidy if prices continue to rise in the international market. That will lead to higher fertilizer subsidy allocation for FY26, which is budgeted at 1.68 lakh crore so far. Discussions are underway at the official level, and sources are indicating that the fertilizer ministry may approach the finance ministry for a special financial provision to compensate fertilizer companies if there is shortfall in their margin. However, fertilizer ministry has asked the fertilizer companies to import sufficient fertilizer to maintain availability in the market. And good thing is that the farmers will continue to get fertilizer at affordable prices.
All right, thank you so much for that, Prakash. Let me come to you, Neeraj. Let me get your view on fertilizer space because, we tend to only speak about this sort of a segment or the space just in the run-up to budget because everyone's hoping that there would be some subsidy announcement from the government, or we talk about the fertilizer space just in and around the monsoon season. But what's your take when you talk about the fertilizer as a space? Because, do you think that this one is a long-term investment opportunity, or given the fact the volatility and the regulations that surround it, it's a very dicey sector to be invested in?
Yeah, I think it is definitely a long-term space to be invested in, but it's important at what price you enter. You should enter into these stocks when no one is talking about it and the stocks correct 10-15%. You don't see major corrections also happening in fertilizer space because our country, this is a very important space, and the demand picks up around this monsoon time. And before the budget is definitely more of speculative buying, with some returns expected because of the subsidy announcement. But around the monsoon, the pickup happens because demand also picks up now. And then I think going ahead with the kind of monsoon forecast we have, in demand should pick up, and there will be strong demand for the space, and I think the prices in the stocks will also reflect that. Though it's because of the international prices going up, if government also gives some subsidy to cover the companies from the additional pressure which may happen in the margin, that will also be somewhat positive for the company. So I think it is a long-term investing sector, but one needs to be very careful at what stock and what price you enter once you make a long-term investment.
That's the take on the fertilizer stocks. But Saumil, also want to get your take on the charts on which fertilizer stocks you're preferring right now. We have seen some movement coming in, the likes of RCF, Fact. They've also had quite the run-up recently. What's your view on the charts, and how would you be picking this space, and how would you be playing it?
I think there are a lot of stocks which have done really well in the medium term outlook, like Chambal Fertilizers or Madras Fertilizer. RCF has been bouncing back from the lows, but however, I'll go with Tata Chemicals. This stock looks really great from here, from these levels. A breakout from a basing out pattern on the upside, trading about 20 and 40 daily moving average, high top, high bottom formations. 832 would be a stop loss for Tata Chemicals, and on the upside, I think 960 would be my target in the short term outlook.
Right, so that's the take coming in on some of the spaces. Let's actually put the spotlight on some of the stocks that are likely to see some reaction in trade today. You have Power Grid, because it's ended the FY25 with flat profits. If you look at the capex, is a tad bit ahead of the guidance. So watch out for Power Grid in trade today. BEL, remember, this one has seen very good ride of late on back of its earnings. The record margin performance coming in the quarter gone by. So sharp OCF dip as well in FY25. So watch out for Bharat Electronics. DLF Q4, that's beaten the FY25 pre-sales guidance. The cash flow is healthy. The other counter to watch out for would be PI Industries. The Q4 has been in line with estimates. They've guided for a single-digit revenue growth in FY26. Petronet LNG, they have also beaten the estimates when you talk about the Q4 earnings. And Gujarat Gas as well. Watch out for that one because they've beaten the estimates on lower natural gas costs. So all of these counters will be in focus when the market opens on back of the earnings and the performance going ahead. But Neeraj, let me come to you and let me get your view on the OMC space, because that entire space was quite heated up given the fact that you saw the sharp drop in crude oil prices. Everyone started putting focus on the OMCs. There was also the dollar drop also that actually came by along with it. That also boded well. What's your take now for the OMCs? If you are actually trying to gauge this one on a longer term structural story, do you think it really makes sense?
I think if one is invested, I think one should stay invested because the momentum is strong, and there's very good possibility that the oil prices will stay low and may drift a little lower from these levels also. So I think it's a momentum play which one should stay invested. As far as the long term, structural story is concerned, I'm not too sure of that because somewhere down the line, even domestically, prices need to tend low as far as the petrol prices or the diesel prices are concerned at the petrol pump. So that may also have some impact whenever it happens. But for the time being, I think one can stay invested with the momentum still looking strong in the sector.
Invested in this space is the outlook coming in on OMCs. We have pre-open rates that's on the screen, that will be on the screen now. We'll give them some time to settle and we'll revisit once again around 9:07, 9:10. But let's talk about M&M. This stock is also in focus. We're understanding that the company is all set to fully subscribe to rights issue of Mahindra Lifespace. We also have a note coming in from UBS on autos this morning where they're saying that two-wheeler demand in non-marriage markets is looking weak, but M&M and TVS Motors stand out. Somil, what's your take on both of these stocks? M&M and TVS Motors, they're looking good to UBS, but what's your take on both of them?
M&M definitely looks great. It has been forming high tops, high bottom, medium-term outlook, short-term outlook, both positive. However, in the very short term, keep a strict stop loss around 3012, which is the previous swing low, and a small triangle pattern has already broken out, and in the very short term on the daily charts, and I'll be expecting all-time highs now. 3278 would be my target in the very short term, but in the medium term outlook, I think the targets are way above. For TVS Motors, same thing. A small triangle has broken on the upside on the daily charts. Momentum indicator has given a buy signal, fresh buy signal. I'll be looking for all-time highs. A short-term target should be around 2960 levels. However, in the medium-term outlook, definitely looking for much higher levels, probably above 3100 levels.
Right, so that's the take coming on some of those counters. Somil, but what's your mid-cap bet for our viewers?
In the mid-cap, I think I'll go with Realty. Realty looks really nice. Phoenix Limited looks great. Broken out of a small consolidation, trading about 20 and 40 daily moving average. Stop loss would be 1556 and the target would be around 1689.
All right, so that's the pick coming in from the realty space. But other than that, we also have some of the other earnings candidates from the likes of Petronet LNG. Somil, just wanted to have a quick chart check on this one because the numbers actually look better than what the street was anticipating.
Petronet LNG, we just spoke about, but definitely it's been consolidating for a little while now. And this consolidation, I'm expecting to break on the upside. In the short term, I wouldn't say that it would start now, but in the medium term outlook, I think the target should be around 350 levels, probably 360 levels as well. But keep a very strict stop loss around 309. That will be my stop loss, and go long on a positional side, not on the short term trade.
It's a positional trade coming in from Somil on Petronet LNG. Neeraj, just want to get your sense on Eternal. Now, this stock has been in focus ever since its earnings. That day when the numbers were slightly tepid, you had the stock that went up. Ever since then, that stock has been consolidating. We now have news flow on this stock that the shareholders have approved for the 49.5% stake when it comes to that cap on foreign ownership. Tell us how, if at all, this could have any ramification on the stock, considering that now this is largely going to be DII owned, and what's the outlook going ahead for Eternal? Also, if you compare it at par with Swiggy, it's been doing comparatively better. So what's the take on Eternal?
Yeah, I think the last results were pretty disappointing, and the news flow is also not very positive. The kind of capex that is being put behind the quick commerce is too high, and that is something where a lot of competition is also going to come their way. So I would, rather than the news flow regarding the DI ownership. I would focus more on the business where I feel there is, strong competition which is going to come their way. So I think one needs to be, if one needs to be really careful at what price you get into this, because I think right now it's more of a wait and watch and see if the internals improve, if the numbers improve going ahead. So I would rather see, couple of more quarters to see what is the trend which is happening with the kind of growth that we're expecting from the quick commerce. Will that continue or not? So that is what is important to watch. So I think it's more like a wait and watch for now.
All right, so that's the take coming in on Eternal. On that note, thank you so much, Neeraj, as well as Saumil, for joining us on the show to give us your takes on various sectors. We did actually manage to cover a lot of them in our chat with both of the experts. But on that note, we slip into a break on this edition of First Trades. As you can see, the rates on the screen still trying to settle down. It looks like we will be in for a flat start for now.